of Jamaica. Importantly, they also confirmed that they have adequate water in stock to support the relief effort, and their main facilities are in St. Catherine, so it was spared from the worst of Melissa. Grace Kennedy is also positioned for increased demand, especially for its canned and other non-perishable food products. Added to that, it could also see a significant revenue boost from remittance inflows through its money services arm, GK Money Services. Importantly, Grace Kennedy resumed most of its operations, including its main distribution center in St. Catherine and its high-low stores. Likewise, over 80% of Grace Kennedy's money services and Western Union locations are now open, including half of the branches in the hardest hit parishes in Jamaica. Nonetheless, a hurdle for GK is the restoration of its meat processing facility in Savannah Lamar, which reported damage and is expected to cause some product shortages. Overall, though, GK is still positioned to produce stable, if not higher earnings. And like we discussed in our sector survey webinar, they have diversified revenue streams because they operate in two sectors, financial services, and in keeping with the consumer staples theme, the manufacturing and distribution of food. And they also are, active in terms of exporting. So even though there might be some disruption to the Savannah Lamar facility, the expectation is that there is other outlets that they can use to diversify and, offset some of that impact. Honeybun is also in a good position. They're baked goods like donuts and cinnamon rolls, and I can tell you, anybody can tell you, I love the coconut rolls. That's my favorite product from Honeybun. But these baked products are shelf-stable items vital for relief distribution, as well as business and household restocking. The company quickly participated in national relief efforts by providing some of these baked goods, and we think this is a signal that they have the capacity to meet demand, and they're ready to do so. Our second winning sector is construction and building supplies. As the national recovery progresses into stabilization and ultimately long-term reconstruction, companies supplying building and construction. So let's zone in on Carib Cement. As Jamaica's only cement manufacturer, Carib Cement is positioned to play a central role in every major reconstruction project. They'll benefit from high sustained demand for concrete, whose main ingredient is, you guessed it, cement. Furthermore, the severity of the hurricane has increased the national focus on rebuilding with weather-resistant construction. This will lead to higher cement consumption and to ensure new structures are stronger and more efficient and more resilient than before Hurricane Melissa. The company would have also noted that it holds sufficient raw material to make the cement needed to meet post-Melissa demands. And its packaging warehouses are fully stocked. Additionally, Carib Cement recently completed its kiln expansion, which raised its capacity by 15 to 30%. And we believe this positions the company well to absorb the expected surge in local demand while still allowing it to grow its regional exports. Now for the second company that comes to mind, Omni Industries. Omni Industries is a key junior market supplier of essential building materials like zinc roofing sheets, your PVC pipes, fittings, plywood, and electrical conduits. The company has confirmed that they are ramping up production to full capacity to support relief efforts, having sustained minimal damage and no long-term disruptions to their facilities. Additionally, given that they supply pipes and fittings, they could see increased demand from entities like the National Water Commission, and their zinc products are also expected to be in high demand for home restoration. Furthermore, Omni is actively pursuing international growth, having recently expanded into markets such as St. Lucia and Dominica, intending to secure at least 20% of its revenues from exports by 2027. Now, our third winning sector is the logistics and infrastructure sector. So companies in this sector are vital for the distribution of relief supplies, including food and building materials. So the two sectors that we mentioned before, this sector is like the artery or the vein that will ensure that these, the food, the consumer staples, and the building materials get to where they need to go as efficiently as possible. Their ability to maintain operational capacity and keep supply chains moving is paramount. In terms of the number of stocks on the Jamaica Stock Exchange, they represent a small percentage, that's true, but these are some of the heavy hitters. When you think about companies like Kingston Wharves and Trans-Jamaican Highway. So let's talk about these two companies. For Kingston Wharves, Its resilient port infrastructure will be critical in handling the inflow of imported relief supplies, fuel, and building materials. Their CEO would have confirmed that the company's operational capacity remained resilient and minimally impacted following the hurricane. And as a result, we expect earnings to remain resilient or even increase coming out of Melissa. For Trans-Jamaican Highway, the toll roads they operate and maintain are central to facilitating the rapid movement of goods, personnel, and machinery, which is required for relief and reconstruction efforts. TJH reported no structural damage to its highway network. And as a nod, I suppose, to their strategic importance, the government of Jamaica would have temporarily waived tolls for about 2 weeks in order to facilitate emergency and relief efforts in the aftermath of Hurricane Melissa. That's how important and strategic Trans-Jamaican Highway is to the recovery effort. This temporary toll waiver did create some revenue gaps, but toll collections have resumed, and the company is currently in dialogue with the government to discuss the impact and the potential for recouping lost revenue. Still, the company continues to be a beast, consistently growing revenues and dividend payouts to investors. All right, so I would have identified 3 winning sectors just now. And while there's a strong thesis for all 3, we mustn't forget that with everything comes some risks, right? So even though we expect that these companies, that these sectors will be the winning sectors, there are risks that we need to consider and we need to be aware of. So the first risk is higher and more prolonged inflation and interest rate hikes. So annual inflation is projected to rise sharply. We mentioned that before, to breach the 4 to 6% target set by the Bank of Jamaica. And this increase would be driven primarily by agricultural supply shocks and second-round price effects on other segments like transport and energy. But most of this is expected to be a temporary spike. However, if there's a higher than expected and a more prolonged inflation run, it could weaken consumer purchasing power and reduce the demand for the products that we have mentioned before, and ultimately have an impact on the revenue projections. It also raises operating costs, potentially compressing the margins for these businesses and the sectors, which could ultimately have a strain on profitability. Additionally, while the Bank of Jamaica has held its policy rates or interest rates stable, it has stated that it is prepared to increase the policy rate or interest rates if inflation risks materialize. Any such rate hike could have an oppressive impact on the stock market outcomes. The second risk that we just wanted to identify is the protracted or the potential for a protracted economic contraction or recession. A prolonged recession would lead to weak aggregate demand across the economy. So this broad economic headwind could outweigh the post-Hurricane Melissa surge, even for consumer staples, once the initial relief and restocking phase ends. Ultimately, a sustained downturn poses risks for all sectors. The third risk that we wanted to just highlight is competition from alternatives or cheaper substitutes. So consumers facing economic strain from job losses, rising inflation, especially if it is protracted or prolonged, not to mention the need to restore homes and belongings, may shift to cheaper substitutes. So for example, although Carib Cement may benefit from reconstruction activity, alternative building solutions such as prefabricated homes require less cement. Similarly, companies like Grace Kennedy and Wysinco could face competition from unlisted low-cost substitutes in the consumer goods space. This dynamic could shift demand away from listed brands and limit the expected revenue boost that we're projecting. The last risk that we wanted to just highlight quickly is the disruption to the value chain. A delayed recovery in key industries, particularly tourism and agriculture, could have significant impacts on companies in the consumer staples sector. So lower sales to hotels and retail outlets that remain closed or disrupted may offset the increased demand that we expect to see from the relief efforts. Similarly, a slow agricultural recovery could lead to prolonged shortages in raw materials, especially for local agro-processors like those falling under Grace Kennedy's umbrella. This scenario could result in higher input costs, pressure profit margins, and product shortages that could prevent companies from fully capitalizing on heightened demand. So these are some of the risks that we have to give consideration to, but our base case expectation is that those sectors that we would have mentioned before, they are well positioned to play a key role in the recovery efforts. And as a result, we expect to see that have a positive impact on their income statements, and that should translate to higher profits, that should translate to higher dividends, and that should, make our investors and make our clients happy, especially if we see the stock price is starting to appreciate. All right, so I know that was a lot to process. So allow me to just summarize real quick. In summary, Hurricane Melissa has created a severe shock to Jamaica's economy, and it will likely cause a recession. However, there are still opportunities even in crises. The massive influx of funding to support relief, recovery, and reconstruction is creating a powerful and targeted economic stimulus to the sectors that we would have mentioned before. So companies in consumer staples, construction, and logistics infrastructure are best positioned to capture this stimulus and lead the national recovery. And we believe that strategically positioning in these sectors offers investors an opportunity to build their portfolio as Jamaica rebuilds. So, all right, I am at the end of my presentation. I hope that you found it value added. I hope that you found some value in it, and you would have learned something. So I just wanted to say thanks, and over to you, Paula.
Thank you, Raju. Thank you. Oh my goodness. I believe if anybody was really listening, you could hear the hope in his voice. And I really want to say thank you, Raju. And if you have any questions, please place them in the chat. We are ready to receive your questions so that we can adequately respond to you. Okay? Thank you. Thanks again, Raju. Now, remember the 3 Ps of financial success I shared earlier. You remember? 3 Ps. Type it in the chat if you remember. Plan, predict, and persevere. This is where they come into play. With the critical insights you gain from Raju's presentation, you are now equipped with the skill set needed to put these 3 Ps into action. And we have the perfect suite of investment products for you to flex your newly acquired financial success muscles. On that note, I just want a little rumble here, a little drum roll rumble. Please help me welcome Mr. Andre Rumble, Assistant Manager for Portfolio Management here at NCB Capital Markets. Andre will showcase our category-leading, heavy-hitting unit trust suite of products. He will dive into how they can set your portfolio on a path for growth for the holidays and into the new year. Over to you, Mr. Rumble.
Thank you, Paula. That was a lovely introduction, and I hope you guys have been enjoying the presentation so far. I sure have, and I've also learned a lot. And thank you again for joining us. So, as we head into the holiday season, this is the perfect time to reflect not only on family and festivities, but also on how we can position ourselves for financial success in the new year. Today, I'll walk you through the unit trust solutions we offer at NCB Capital Markets and highlight our 3 top performing funds for 2025 so far. Our theme, as mentioned earlier, is Deck Your Portfolio this holiday, because smart investing is one of the best gifts you can give to yourself this season. So let's begin with the basics, because we have a mixed audience today. So a unit trust is simply a large pool of money collected from many investors. That pooled money is managed by a professional investment team and invested across different assets, including stocks, bonds, real estate, and money market instruments, to name a few. The key advantage here is that instead of buying individual securities yourself, you get access to a diversified, professionally managed, and cost-effective portfolio. So whether you're a first-time investor or someone who invests actively, unit trust products make the process simple and accessible. Let's zoom in real quick on 3 big benefits of unit trust funds. First is professional management. You have a dedicated team monitoring the markets and making decisions on your behalf. Someone like me and my team. There are also lower investment minimums, so you don't need millions to build a portfolio. And you'll see how low you can get started in just a few. And thirdly, diversification. Your money is spread across many assets, reducing the impact of any one investment underperforming. Especially in uncertain markets like we are in now, and as Raju have covered so far, diversification is one of the strongest tools you can have in your arsenal. Now, let's take a look at the stars of the season. And I'm going to be highlighting our top 3 performing unit trust funds over the next few slides. Each serves a different need, so no matter your risk profile or your goals, there is something that fits. First up is the Income Optimizer Fund. This portfolio utilizes a dynamic mix of growth and value investing strategies to generate long-term capital appreciation. And I just want to highlight a few key facts of the Income Optimizer Fund. So the typical investor profile is moderate to aggressive. The fund typically invests in bonds, loans, and equities. And year to date, as at the end of November, we have earned 6.67%. The holding period for this fund is 180 days, and that simply means you have to wait. So if you invest today, you have to wait 180 days before you can withdraw your investment without incurring a fee. The minimum investment is very low. It's at $50,000 because you want to make investment and investing accessible even without spending a lot of money. And after your initial $50,000 investment, if you want to top up your investment over time, which we recommend, it's only $5,000 each time or more that you can add to your portfolio. And last but not least, this fund year to date is ranked #1 relative to its peers. So it is delivering hits for the season. Now, I've been talking about performance so far and how the fund has the key facts. So I want to use that same example using the $50,000 initial investment. And if you started the year at $50,000 and you invested in the Income Optimizer Fund, year to date, as at the end of November, your $50,000 would now be worth $53,335, or a little under 7% growth year to date. If you look over the past 5 years, if you invested 5 years ago, your $50,000 would now be worth $60,865, or it would have grown over 21.7%. And if you're looking back as far as when the fund was created, if you invested from that time until now, your $50,000 would be worth $76,860, or it would have grown over 53%. So as you can see, there are benefits to investing in the long term. The benefits are greater and your money grows steadily and more consistently for you. So when you think of the Income Optimizer Fund, this portfolio is as reliable as your favorite Christmas classic, always delivering the beat on your financial playlist. All right, so we've spoken about the Income Optimizer Fund so far. Next is our JMB Money Market Fund. This one is the most conservative of the 3, and this portfolio's primary purpose is to achieve maximum income while preserving capital and liquidity. And for a few key facts, the typical investor here in the money market fund is a conservative investor. Hence, they prioritize preserving their money and they don't want any losses or minimal losses. We typically invest in bonds and money market instruments for this portfolio. Year to date, as at the end of November, it has returned 5.55%, and the holding period on this one is shorter at 30 days. So again, you would have to wait 30 days before you can withdraw your funds without a fee. And the investment is the same as before. It's $50,000. And if you want to top it up, it's $5,000 or more each time. And this portfolio has also ranked top 3 relative to its peers year to date. So let's look at that same example. We're going to continue with the same 50,000, and we're going to see how it stacks up here on our most conservative fund. So year to date, your $50,000 would have grown to $52,775, or a little over 5.5%. If you look 5 years back, if you had invested 5 years ago, your $50,000 would now be worth $60,315, or a little over 20.5%. And if you started when the fund started, your $50,000 would have grown to a total of $81,035, or a little over 62%. And the money market fund is perfect for keeping cash accessible for holiday spending as we're in the holiday season, or it can be a gift to your future self, one that I recommend. So now we're moving over to our top performer, another one of our top performer, which is the real estate fund. And this fund continues to dominate and lead in its category. This portfolio seeks long-term capital appreciation by giving investors access to a broad range of income and growth-producing real estate assets, including high-quality commercial real estate properties in prime locations. And now let's zoom in on a few key facts as we did for the other portfolios. So as I mentioned, this fund is ranked #1 relative to its peers. Its risk profile is moderate to aggressive, similar to the Income Optimizer fund, and we primarily invest in commercial real estate properties. Year to date, this fund has returned 17.71% as at the end of November, and the holding period here is longer. It's 3 years, so you would have to wait 3 years before you can withdraw your funds without a fee. And remember, you can take it before, but if you do, you would incur a fee to do so, and you'd also miss out on the great investments and growth that the fund has been earning. And for investments, even though it's real estate, we still kept the minimum at 50,000. So it's really easy and accessible for you to get started on your real estate investment journey. And if you want to top it up, again, just 5,000 each time or more. And a big bonus for the real estate fund is that it pays quarterly dividends. And since the inception of the fund, we have paid that quarterly dividend to investors. So using that same $50,000 example, we're going to apply it once more to the real estate fund. Year to date, your $50,000 would have grown to $58,855 year to date, or a little over 17.7%. And if you look to when the fund started, which is just about a little under 3 years ago, your $50,000 would have grown to $84,625, or a little over 69%. So for the real estate fund, it has solid foundations. It has been delivering steady growth, and this is a gift of confidence for every season ahead. So as we wrap up here, I know I've covered a lot so far, but I just wanted to highlight a few main reasons to consider the unit trust portfolios that we offer at NCB Capital Markets. So the first one is that there are strong returns. These funds have delivered solid returns year to date and in the long term, as we have seen. There are low investment minimums, so it's easy to get started. And remember, as I told you, that $50,000 is very, very easy compared to trying to go into all those investments yourself, individually. And there is market-leading performance backed by strong portfolio management. There is diversification across income, liquidity, and growth assets, depending on your goals. So there is something here for everyone. And last but not least, these portfolios are professionally managed, so you don't need to be an expert to invest like one. So whether you're starting your investment journey or enhancing your existing portfolio, this is a great time to deck your financial house for the new year. And of course, our wealth advisors are here to guide you step by step, and you'll hear a bit more about that as we get into the latter parts of the presentation by my other teammates. So that brings me to the end of my presentation. Thank you so much for listening. Paula, over to you.
Okay, Mr. Rumble, thank you so very much. Thank you for that deep dive into these heavy hitting, top performing funds. Folks, you heard it right. The Income Optimizer Fund, we call it the IO Fund. And the Real Estate Fund, we call it the RE Fund, are number one in their category in the industry. Now, ladies and gentlemen, this is why a managed fund like Unit Trust help investors in times like these to combat the risk Raju identified. And now, I know that this was quite a lot of knowledge. And before I say anything more, keep the questions coming. We're seeing the questions and we are going to address them. But before we do that, I want to just say this. I know it was a lot of knowledge. A lot of information was just given and insights for you to soak in, but not to worry. We have Ms. Taneisha Mullings, Senior Wealth Advisor, who will sum up these things into a very nice little bow for you and share some simple steps to get you started. Take it away, Taneisha.
Thanks for the welcome, Paula. Good evening, everyone. And I'm Taneisha, as Paula said, Senior Wealth Advisor here at NCB Capital Markets. So as Raju and Andre adequately put it, they didn't say it in these words, but basically translates to the time to invest is now. The place to invest is here. And we want to make you happy by decking your portfolio this holiday with investments that grow year on year. So, Raju started off with a whole lot of information about our economic outlook and how well we were doing before Melissa decided to, present herself, in the way that she did. So he spoke of the falling unemployment levels. He spoke of, the lowering of the debt to GDP ratio and projections of a 2.9% inflation. But then Melissa came and as Raju adequately put it, Raju, he said, she blew away the apple tree and turned over the cart. Now, he told you that our own chairman has always said that crisis basically equals to danger plus opportunity. And he's not the only one who has said something similar. Sun Tzu also said, even in the midst of chaos, there is opportunity. And guess what? Today's markets are no different. So with the right strategy, adversity becomes advantage. Now, Raju also spoke about, some of the stock options that we would be looking at, including those unit trust portfolios that Andre so adequately articulated on. So he spoke about the consumer staples to include like Quisinco, construction and building, for example, Curb Cement, the logistics, Jamaica, and the financial services companies. With this blend, we can see where we're heading. So we can know that we have the right strategy, right? Right, Raju, we have the right strategy. We have to feed ourselves, right? We have to live somewhere. We have to move stuff. And guess what? We need people who manage money to move money from one entity to another. And right on the heels of that, of course, Andre came out with, all these bolstering, these top 3 performers that we have here at Capital Markets that I have the opportunity to sell on a daily basis. So he spoke about the bare minimums, $50,000 just to start. Now he gave us some projections, like he said, 53,000, I think he said in one case, if it's year on year or 50, I don't remember exactly what you said, Andre. But can you imagine if you were able to invest 500,000? Can you further imagine if you probably might not have 500,000 at the outset, but you can add incrementally and get to that 500,000 in terms of a principal investment. So therefore, your return would have been significantly higher. Its return, 6.67%. You are doing basically nothing. You're just giving us your money, and we're giving you 6.67% on it. He spoke as well about our Jamaican dollar money market fund that performs year-to-date 5.55%. Again, you're hearing some little single-digit numbers, but you know what the truth is? Sometimes we have to grow incrementally because it's steady growth and it's surer growth, right? Notwithstanding that, we have our fantastic real estate fund, which we started 3 years ago. The year-to-date performance on that is 17.77%. And ladies and gentlemen, I can tell you as a salesperson, this has been a winning solution for many of my clients. I have clients who have enjoyed up to like a 70% return just on the accumulation in the price of the units. Plus, they've gotten their dividends. Minimum 3-year holding period. And guess what? We're number 1 in the market. So with all of that being said, we can see that NCB Capital Markets has the right strategy because Raju predicted, right? Andre is planning, and we are going to help you to persevere. We have the right human resource. We have people who are knowledgeable. We have people who will listen to you, who will understand the position that you're in and where you want to get to. We have the right tools. And most importantly, we have you, the right clients. So with that being said, ladies and gentlemen, are you ready to put your money to work? And we're going to invite you to connect with us, not just after this session, but through our Go IPO tool. Simply goipo.jncb.com. You can go there and you can create your own investment account if you don't have one already, as well as you can place your orders there for these fantastic products that Andre so articulately described. We also have another tool, which is lovely, the risk profiler. So we know that some persons are new to investments. They may not know as much. There are some persons who are not new, but still don't know their risk profile. You need to understand what you can tolerate. So just like when you go to the doctor and you have an allergy, he knows what to prescribe. This tool helps us to tell you what, to suggest to you what is an adequate buy for you that suits your profile. So for this risk profiler, you can access it by going to My Wealth, by typing My Wealth, WhatsApping My Wealth to 876-728-7075. That's by WhatsApping My Wealth to 876-728-7075. Now, ladies and gentlemen, we're going to go right into our question and answer section that will be moderated by the lovely Paula. We trust that you have really learned a lot this afternoon. We really value you, our clients, and that's why we're so dedicated to bringing this quality and caliber information to you on a regular basis. Over to you, Paula.
Oh my goodness. Thank you so very much, Taneisha. Guys, I don't know what to say, but we have everything right now. And before I go into the question, I really want to highlight a comment that Robert, who is part of our audience, said. He said, I was never a fan of unit trust until I invested in the RE fund. Growth plus dividends, good going team. And nothing says performance better than a testimonial. When one of our clients can actually say, and all of us, I'm quite sure all of us on this live here, myself and all of us, we have investments in the unit trust and we have seen the results of it. The benefits of going long term, the benefits of being diversified in a few companies or industries and exercising the laws of wealth creation. So guys, I'm going to go now to your questions. If there are any more testimonials, feel free to put it in the chat so that we can see that you have benefited from the unit trust product being offered by NCB Capital Markets. Now, this question is for Andre. One of our guests, they have asked, when do the fund year-to-date start? Year-to-date start. When does it start? Is it as of January or when the fund's financial year starts?
That's a great question, Paula. So yes, it is at January 1st. So we do calendar year-to-date starting January 1st every year.
Oh, wonderful. And that's a very simple one because I think, and then also, can you tell us, like for the income optimizer, when was the inception date, as well as for the RE fund, when was the inception date?
Sure. So the inception date for the RE fund was 2023. So we're coming up on 3 years. And for the income optimizer fund, I believe the inception date was around 2013.
Okay, so it has been around for a while.
Yeah.
All right, thank you. If you need further clarification on that question, just quickly drop it in the chat or we will address it afterward as well. So the next question we have is for you, Lady Taneisha. Our guest is asking, I want to open my account now. Need to get in on these funds. How can I open an investment account?
Okay, so the easiest way that you can do it immediately, as in right now, is to visit our website, www.goipo.jncb.com. That's GoIPO, go as in go, I, intelligent, P, person, O, opportunity.jncb.com. Alternatively, you can also speak with a wealth advisor close to you. We have them spread across many locations. For locations that don't have an advisor, you can be assured that there's somebody who at least shadows that branch so you can get access to open your account.
Thank you, Taneisha. So just for everybody to understand, you can open an account either visiting a branch, or you can either go to our website, www.goipo.jncb.com. Okay, let us go to our next question. I hope this is being beneficial to everyone. So this question now is for Sir Raju. Your guest says, great data, love the ratios. How can I learn more about the stocks that are performing and see breakdowns for them?
Sure, that's a fantastic question. The short answer to the question is that you're already at the right place. So by being, a client at NCB Capital Markets, you get access to premium information. Some of it is available online on our website. So we do produce market recaps that provides commentary on the latest developments for stocks. But if you want the more detailed information, we also provide something that we call our market guide, where we also do some analyses on different companies and different sectors and some of those ratios. And then for specific analyses of individual companies that materialize in terms of a recommendation as to buy or sell, we at the research team, we research these companies, these sectors, the winning sectors, and we try to find companies that have strong fundamentals, and we try to adhere to the 5 laws of wealth creation when we do our analyses. And these are published to clients that are on our mail list. So by becoming a client, you'll be able to get access to these recommendations on individual companies, and it includes a deep dive, thorough analysis of the companies. So the latest one that we would have published is for Carib Cement. And that is one of those companies that we would have included in the winning sectors in the building material and construction sector. And that is the last recommendation that we would have done. And there are many in the pipeline. So if you want to get access to those, we recommend you become a client today, and you'll get access to that and much more.
Well, thank you, Raju. Thank you so very much. I see that somebody had asked if our money market fund is the same as a competitor's Cap M fund. You will find that there are going to be similarities because they are in the same asset allocation. So I want Andre to talk about how our money market fund is rated with the other competitors, briefly.
Sure, Paula. So yes, as you rightly said, there are some similarities generally across competitors, but our fund is currently in the top 3 for that category of money market funds. And something that helps differentiate our fund is we have a very disciplined and conservative approach. So we're very focused on delivering the best returns while ensuring that there are minimal losses, so that we are preserving your capital, because a very conservative fund, and we aim to keep very conservative assets like money market instruments and safe high quality bonds and so on in the portfolio. So you can rest assured that if you have a fear of losing your money, this is a fund that is very, very low in risk.
Thank you so very much, Andre. So one of the things I wanted to add as well, once you are an NCB Capital Markets client, you will be added to an email list that will keep you up to date. I love these research emails that come out. So I see the number of questions asking about, the different companies and different specifics. And I want to just encourage you, make sure you read. If you are already an existing client, read our research things. It's very important. Have the conversations with your advisor as well. Now I'm going to take one more question. And this one is for Raju again. Raju mentioned sectors such as food, building, and distribution. However, he didn't mention anything about the pharmaceutical industry. And I want Raju to answer this one because I understand this question quite well. Go ahead,
Sure,
Raju.
no problem. So I would have mentioned 3 sectors. I'd have mentioned consumer staples, I'd have mentioned building materials, and I would have mentioned, infrastructure and logistics. Pharmaceuticals would technically fall under consumer staples. So, I perhaps should have mentioned, pharmaceuticals under that bracket. So companies, when you think about companies that dabble in the pharmaceutical industry, you can think about, you can think about maybe Fontana Pharmacy. You could also think about, there are other companies that are on the Jamaica Stock Exchange that you can think about as well, but they would also fall under the consumer staples. I forgot to mention another critical one, which is Indus Pharma. They're also pharmaceutical.
Yes.
I would be remiss if I didn't mention them. And it's in the name, so that would be crazy, but
right.
So they would also fall under consumer staples. So they would also be subject to the same set of factors and characteristics. Because if you think about it, whether or not, the economy is kind of sluggish, people are still going to want to buy their medicine, they're still going to want to buy their Panadols and, pharmaceutical supplies and whatnot. So it would still fall under the same bracket. So it's just a matter of whether or not Hurricane Melissa would have had a significant impact on their operations. So one company, for example, Fontana Pharmacy, they would have, published that, some of their outlets, because they do have a branch in Fairview, they have one in Savannah Lamar, they do have one in Mandeville as well. They would have mentioned that, they would have gotten some disruptions. And we at NCB Capital Markets is one of those companies that we're doing analyses on. So if you want to know what our final recommendation is on a pharmaceutical company, become a client, and when you see that email, you get to, see, what our research comes up with.
Wow. Thank you so much. Yes, it would be remiss of you not to mention Indus Pharma. Yes, Indus Pharma, Fontana Pharmacy. Pharmaceuticals will always make money. Always. Health industries, always. So thank you for that very good response and insight into it. So I have a question here for Lady Taneisha. And of course, I like the questions when they come to know, how do I get started? And here I want Taneisha, our guest is asking, how much money do I need that I have to invest to get started? I'm paraphrasing.
Okay, so with the products that Andre mentioned, it's as little as 50,000. But you can add whatever amounts you want to add incrementally, and you can always start with more than 50,000. We appreciate that too. The more money you invest is the greater your return will look to you. I saw another question in the chat, Paul. I don't know if you want to answer that one. Somebody was saying that if they already have a capital markets account, if they go to Go IPO, if they'll see the details for the account. Usually, if you have a capital markets account and you have online banking, you should be seeing it on your dashboard, and you can actually access it from the NCB online website, or you can download our app, the NCB Wealth Connect app, NCB Capital Markets Wealth Connect app, and access it from there as well. So I hope that answers your question.
Yes, and it's the same sign-in credentials that you use for your NCB online, that you use for your online banking, that you will use to go on your NCB Capital Markets Wealth Connect app. Correct, Taneisha?
Very correct, Paula. And just to mention that, you can place your recurring orders there as well. So sometimes, you get your salary, and just because there was nothing in place to actually move the money, you forget. We put the proper things in place to move the funds for you on a monthly basis for them to be invested.
You can do the same. You can also invest in stocks as well by setting up a monthly standing order. Correct, Taneisha?
Yes, that's correct.
Right. So what I love about this Wealth Connect app is that it gives you the freedom of setting up a standing order that can just automatically come from your NCB bank account or on your cash account on your Cap Markets account, and it will just pull the money from the account and you just set it and forget it. And also it allows you the flexibility instead of coming into a branch, making a call. Once you have that framework that you operate in, you can automatically do your purchases yourself. And this is what I love about investing with NCB Capital Markets. We make it easy for you. All right, so we have now come to the end of this time with you. And we are truly thankful and grateful for allowing us just 1 hour of your time to just deep dive into a framework for investing, for understanding what is happening in our economy now in Jamaica and how we can position and understand the risks. Then, of course, to understand what solutions we have that will help you to invest in this framework and take your emotions out of it and look at it and plan. You can predict, plan, and persevere in building a very resilient portfolio. And we ask that you just take a poll right now. Take a poll for us to just to keep in touch with you. If you have further questions, you need further guidance, there's a poll that is coming up on your screen. Just take a minute and do it. And remember, we are here for you. It all is not lost. If you did not start with your investment portfolio a year, 2 years, 10 years ago, as Taneisha said, the time is now. And we are here as your trusted financial advisors, wealth advisors, to help you, hold your hand and walk you through. We have the tools, we have the apps, we have the research, we have the products. So I want you to just take the time, do the poll that is on your screen now so that we can remain in touch with you. We also ask, if you do not know what your risk profile is, whether you're an existing client of NCB Capital Markets or you're brand new to us, I want you to take your risk profile, go through the exercise, understand what is your investment appetite, and do it now. Add 876-728-7075 to your contacts, and you're going to WhatsApp My Wealth, no space. It is not case sensitive. Just put MYWEALTH and have a conversation with our chatbot, Simone. In turn, she will ask you some questions, and at the end of it, you will know what your risk profile is so that you can continue your journey or start your journey. My name is Paula Brown. I have been your host, and we thank you again for joining us at NCB Capital Markets to ensure that you deck your portfolio with investments. And if I don't see you, have a Merry Christmas, and I pray that 2026 will bring joy, peace, and love, and more money in your pockets. Have a blessed day, and thank you.